Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 12th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, what we can assess here is that we have a fresh triple EMA cross from VantagePoint with our key support now 89.85. Now we've been calling for dollar strength for several weeks now, but the fundamentals are really starting to catch up with some of the other currencies and more specifically some of the other commodities like oil and gold, and they're succumbing to US dollar strength. Now, as long as 89.85 holds with that 18-day predicted moving average, then we should continue to advance in the dollar index. Now, this is having a very negative effect on the equity markets, along with the FOMC, the non-farm payroll. A more normalized interest rates are going to see more normalized equity markets. The equity markets are not just going to keep going up, up, up. Now, the key VantagePoint level for next week, in my respectful opinion, is up in this 27.38 area. Now, the one thing I will point out is that long before this big crash happened a week ago Monday, we actually saw the dollar index move considerably higher and the equity markets considerably lower. Now, case in point is you can see that that triple EMA cross from VantagePoint actually came at the end of February, or excuse me, at the end of January, and that led to a move from the 28.50 mark all the way down to 25.40, where it finally started to turn higher. But you can see that we are not even testing the VantagePoint 8-day predicted moving average. Right now, the equity markets are incredibly bearish. Now, that same thing has happened to the equity, or to the oil markets, excuse me. Fresh triple EMA cross, oil pushing lower. All of this is fueling a dollar rally. Same thing for gold here, guys. Gold next week, 1332. As long as we hold below that level, gold is likely to move lower. Now, a little bit of a concern here, the medium-term trend weakening against the longer downtrend, so keeping a close eye on that. But for now, not a lot of buyers of gold. So as long as gold is moving lower, the euro is also moving lower with it. Now, the signal from VantagePoint to start selling the euro actually came around the 125.20 area, and we're continuing to show weakness in the euro currency. The key level for next week, 122.92. As long as we're holding below that all-important psychological 123 level, the euro is likely to move lower. We don't have any indication from VantagePoint that this is going to reverse. This new trend is going to reverse anytime soon. Now, there may be a little bit better opportunity next week in US Swiss franc once we break and hold above 94.26. Now, we did push above that on Friday, but then we retreated back to 93.90. So if we can continue to push higher and get above 94.26 and the euro continues to hold below 123, then the US Swiss franc pair will advance higher. Now, with the pound dollar for next week, the key VantagePoint level 139.34, we're closing well below that at 138.23. But in my respectful opinion, the Bank of England was pretty hawkish this week, and I think we could see the pound recover. So we're going to be looking for signals from VantagePoint warning us of a potential reversal. But for now, most of the indicators are still saying we're moving lower, the neural index, the predicted differences, and a break of the 40 level on the predicted RSI has led to a fairly substantial move to the downside. Now, as we come into the dollar yen for next week, the dollar yen should be moving higher with a stronger US dollar. The problem is the main intermarket correlation here is the equity market. So as the equity markets sell off, that strengthens the Japanese yen. That's the thing here. So right now, you can see we've come up and tested that critical VantagePoint 18-day predicted moving average at 109.64, but we continue to fail. But we also have very significant support down between 108 and 107. If we look at it on a 9-month basis, we're still in the overall broader range. That overall broader range on this particular pair comes in at or about the 114.50, and the lower end of that range about 107.20. Nothing has changed. Very little has changed inside the bigger, broader range. So we have to keep that into consideration, take that into consideration when we're buying and selling this particular pair. But for now, the key indicators from VantagePoint are yet to give us a warning sign that this pair is going to reverse higher. The only way, in my respectful opinion, that this will move higher is if the equity markets recover. The S&P must get above 2667. If it doesn't get above that level, then the dollar yen is likely to continue to move lower. Now, with the USCAD pair, once again, I've talked about this one over the last several weeks. Solid support down here at 122.70. We've leveraged off of that. The VantagePoint indicators turning positive off this basically after about 7 trading days where we were unable to get below 122.50. The pair had started to advance, and it's moved from 122.50 all the way up to 127. Now, the Canadian non-farm payroll number on Friday, pretty horrible number, and as I've stated to my own direct clients, I did not anticipate a good number coming out of Canada with the minimum wage hikes, etc. So we're going to start seeing the Canadian economy really start to cool off, in my respectful opinion, and numbers like that, 88,000 job loss for January, that is definitely going to lead to the Bank of Canada backing away from any interest rate hikes anytime soon. So the key VantagePoint levels for support, where we could see buying opportunities start at 125.79 and go all the way down to 124.76. But this area at 125.14, in my respectful opinion, is likely to hold next week, and we should start moving back towards the 127 mark as the commodity markets across the board continue to move lower. Now, Aussie US and New Zealand US. Aussie US has made a big move here, guys, but we've got to be a little bit careful. We can see in the predicted RSI that we did not break down below 40. We're bouncing off of that level. That's a little bit of a concern. So our low point for the week coming in around 77.50. We'll be looking for a move below that area to confirm shorts, but right now I would be very cautious with this particular pair because the key VantagePoint 79.52 is the critical level, and the further we move away from it, the more likely it is we're going to retrace back to it. Now, the neural index, the predicted differences, they're all still pointing down, but again, that predicted RSI is a warning sign that we may not have a lot of selling momentum down below 78. Now, as we look at New Zealand US for next week, once again, we've made a new low for the week, but then we've paused and started to move higher. However, the key VantagePoint level, 72.77, shorts are favored while under this particular level. The majority of the indicators still look relatively bearish, but again, we're not seeing very strong downward momentum as we're not staying below 40 on the predicted RSI. The neural index has gone from a 0 to a 1, so we're probably going to move a little bit higher on Monday and Tuesday, but we could see a good selling opportunity if 72.77 holds. So with that said, this is the Forex Weekly Outlook for the week of February the 12th, 2018.